Oil prices are recovering after some heavy losses on Monday. Brent crude dropped over $2.50 but has now climbed back slightly. The raging wildfire in Canada continues to make an impact. Analysts say there could be disruptions to supplies from the oil-rich region. Well, we're joined now by Majid Jafar. He's the CEO of Crescent Petroleum, a Middle Eastern oil and gas company. Sir, thank you very much for joining us. Great to have you with us on the show. I wanted to begin by asking you about the impact, as you see it, of these Canada wildfires. Some estimates have put the outage at something like 1.6 million barrels a day. How do you see the overall size of the disruption?
I mean, clearly it's it's a terrible event that's befallen Canada, and in terms of the oil markets response, it's adding to jitteriness and increasing reports of oversupply. But if we look overall, we've seen really prices recover almost 80% since January, and we're now between $40 and $50, hovering in that range, which by historic standards is not actually that low. It's just that markets and producers and governments have become used to prices in excess of $100, stable for the 4 years before the fall.
As you say, prices have recovered significantly, and there's various reports that in 2016, oil production is going to decrease in the United States and in Asia and other parts of the world. Do you think we're now seeing an end to this sort of historic level of an oil glut in the global economy?
I think what we've seen as a result of the sudden fall is a big drop in investment across the oil and gas sector worldwide last year and then again this year, and almost unprecedented fall in investment. And the concern is indeed that may cause shortages and a price spike in the future. Apart from looking at the US shale oil response, which is important, and it's proven somewhat more resilient than people expected, but you're seeing several bankruptcies and certainly fall in production in some key basins. But on the demand side, I think that's more important and doesn't get enough attention. What's actually happening with, for example, Chinese demand? Growth in China is lower than it's been for a generation almost, and the nature of that growth is far less energy intensive because they're trying to move their economy to more demand-based, service-based, and less about manufacturing and raw materials. So that actually doesn't get enough attention and is a key driver. Looking at our region, the Middle East, and we as the oldest private oil and gas company in the Middle East, we've seen a lot of these oil cycles in our almost 50 years, but our region punches below its weight. We're still stuck in the structure of the 1970s with national oil companies dominating with some limited role for the large foreign majors. So despite having over half the world's oil and gas resources, we have less than a third of oil exports and less than a sixth of gas exports. So there's still a lot more potential from the Middle East.
And as a major regional player on that subject, I wanted to get your outlook for Saudi Arabia, which recently just replaced their oil minister and is, of course, grappling with a significant fiscal crisis in the face of these lower oil prices. How do you see this playing out for Saudi Arabia in 2016?
So I think the transition was long expected. Ali Naimi was in his 80s, and I think he had wanted to retire for some time. And Khalid Al-Falih, like Ali Naimi before him, was the CEO of Aramco, very well respected in the industry. I know him, and he's seen as a steady hand, but also a global figure in oil and gas. So I think the transition is smooth. But more interesting is the intention of an IPO for Aramco, the dominant national oil company in the region. And the reason that was given in the first interview by Prince Mohammed was to improve efficiency and transparency, not so much just to raise money, which I think is very interesting, and indeed professionalizing the national oil companies, separating them from the regulator and the policy in the ministry is, I think, a very good thing. And across the region, you've got really three kinds of countries. You've got oil exporters with lots of savings, like Saudi Arabia, who now, of course, have less revenues, but still significant revenues, and they're taking advantage of this to conduct the reforms. Then you have oil importers, net importers, like Egypt, who, again, now that the prices are lower, they can tackle energy subsidies better. And then you've got oil exporters without the savings, countries like Iraq, that have squandered the high oil price period, and now are asking for an IMF bailout, something nobody thought was even possible just a few years ago. So I think across the region, the Middle East, the word is reform, 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 and necessity is what's driving that.
Majid Jafar joining us live from London. Sir, thank you very much for that. Appreciate it. Well, for now, oil